All right, today we're tackling a massive investment question. If you had a nice chunk of change back in 2014, where should you have put it? Gold or real estate right here in the United States? We're going to crunch the real numbers over the last decade and find out once and for all who came out on top. Let's do it.
So here's the big question, the whole reason we're here. Picture it. It's 2014, and you've got $40,000 burning a hole in your pocket, ready to be invested. You've got two totally different paths in front of you. One is that shiny, precious metal, the classic safe bet. The other is a piece of property, a slice of the American dream. Which one would have made you wealthier over the next 10 years?
So this is our seed money, 40 grand. We're going to follow this exact amount of cash down two completely different timelines just to see where it ends up.
Okay, let's head down path number one, the case for gold. You know, this is what a lot of people think of as the simple, steady, maybe even the safe option. Let's see how that journey actually plays out.
So let's rewind to 2014. Gold's hovering around $1,200 an ounce. We take almost our entire budget, $39,600, and buy ourselves a whole kilogram of pure gold. And just like that, step one is done.
So what's next? What's step two? Well, that's the thing. There is no step two. That's the whole appeal of this strategy. You buy it, you stick it in a safe, and you forget about it. You don't have tenants calling you at 3 a.m. about a leaky toilet, no surprise maintenance bills, nothing. It's about as passive as an investment can get.
Okay, now let's fast forward a decade. It's 2024. How much is that lump of gold worth now? A cool $65,700.
So let's just break that down. We started with about $40,000, ended with over $65,000. That's a profit of around $26,000. A 66% return on our money. Not bad at all, right? A super simple, clean win.
All right, but now we've got to hit the rewind button. Back to 2014. Let's see what happens if we take path number two, real estate. This approach is a lot more involved, so let's walk through it.
Now, with real estate, things are way different. That 40 grand isn't enough to buy a house outright. Instead, that becomes our 20% down payment on a property worth nearly $200,000. We get a mortgage from the bank for the rest, find some tenants to start paying rent, and then, 10 years later, we sell. You can already see, this is a whole different ballgame.
But before we get to the final number, we have to talk about the secret ingredient here. It's a little something called leverage. By using the bank's money, you get to control a huge $200,000 asset with only $40,000 of your own cash. What this means is that if that house goes up in value, you get all of that gain, not just the gain on your 40 grand. It's like pouring gasoline on a fire.
See, with property, you're actually making money from two different directions. First, there's the rent check every month. Even after you pay the mortgage and all the other bills, that pure cash flow adds up to almost 79 grand over the decade. And then, on top of that, the house itself is worth more money. A lot more. Your equity gain is over $217,000.
So, what's the grand total? Are you ready for this? After you sell the property, pay back the bank, and pocket all that rental income, your profit from that same initial $40,000 is an absolutely staggering $296,000.
Okay, so we've seen both stories play out. The slow and steady gold play and the turbocharged real estate ride. Now let's put them head to head and see who really won the money game. And wow, when you look at the numbers side by side, it's not even close. Gold gave us a nice, simple $26,000 profit. Real estate, thanks to that magic combination of leverage and rent, delivered nearly $300,000 in profit. I mean, in this showdown, for this specific 10-year window, real estate didn't just win, it was a total knockout.
Okay, but hang on a second. Before you go and take out a second mortgage on your house to buy rentals, we need to have a serious talk. Because big, shiny numbers like that are exciting, but they almost never tell the whole story. We need a reality check.
So was that real estate path really that simple? Just sign a few papers and collect the cash?
Yeah, if you've ever been a landlord, you're probably laughing right now. The answer is a huge no. Our perfect scenario here didn't really account for all the real-world headaches.
The reality is, there are property taxes every single year, eating into your profits. There's the furnace that decides to die on the coldest night of the year, or the roof that springs a leak. There are times when you can't find a good tenant for months, and guess what? You're still paying that mortgage. This stuff is real, and it costs real money and causes real stress.
And really, this gets to the heart of it all. It's about a fundamental trade-off. Gold, you can sell it in a day.
It's super liquid, and it needs zero management. You just own it. Real estate is the total opposite. Selling a house can take months, and it's basically a part-time job, whether you're doing it yourself or paying someone else to.
So where does that leave us? We've got these massive returns on one side and all these hidden headaches on the other. What's the final call? And more importantly, what does this mean for you?
Look, if we're just talking about the pure, raw numbers for this specific decade in the US, real estate was the hands-down winner. No question. But that huge win came with a price: complexity, risk, and a whole lot of work. Gold, on the other hand, gave you peace of mind and a simple, solid return that has a value all its own.
And that's what it all comes down to, right? It really comes down to a question about you. What kind of investor are you? Are you the kind of person who's willing to deal with all that complexity for a shot at those huge returns? Or do you value safety, simplicity, and a good night's sleep more? There really is no wrong answer.
And that brings us to one last question as we look to the future. The last 10 years were incredible for real estate, but will the next 10 be the same? So what do you think? What's your call for the next decade? Will leverage and property continue to be king, or is it time for the safety of gold to really shine? The game starts over now, and the next chapter is anyone's guess.